Hey guys, Boris, welcome to the weekly technicals for Aug 15 to Aug 19, 2016 for the majors for euro dollar, dollar yen, and pound dollar, can dollar hold bid. That's really sort of the big story into the front of this week, because we've had a very, very topsy-turvy week with the dollar. Last week we had great NFPs. That sort of really created a positive vibe on the dollar going into the front of the week, and then the dollar started to really sell off hard on the belief that the Fed is just really not going to hike rates anytime soon, even into December, as everybody started to worry about other components of the U.S. economy. This week, at the end of this week, we had a very, very weak retail sales number, which kind of really confirms sort of the dollar bearish view that there's no way, despite the fact that we have a strong jobs growth, that there is enough demand in the U.S. economy to want to grow, to want to tighten rates. Especially in an environment where everybody else is kind of lowering rates. But, the interesting thing that actually happened when you look underneath the retail sales numbers is that they weren't really that bad. What happened was, and many people are beginning to speculate about this, is that a huge amount of U.S. retail sales data now is being pulled online rather than into the brick and mortar stores. And since most of the retail sales data is still sort of reported on a brick and mortar basis, it could be a secular rather than a cyclical decline, and therefore really not as material to the Fed as one would think. Still think, obviously, that the Fed is going to do nothing in September, but we do this week have the FOMC meeting notes, and this is coming off of a relatively bullish, relatively hawkish FOMC meeting last, in August. So therefore, it'd be interesting to see at least what the tone of the Fed officials is in this particular meeting, and then what the tone is going to be going forward. Overall, the picture is sort of interesting because the U.S. economy continues to chug along, but it has these spots of weakness amidst what is generally still a relatively positive economic growth. The question is it going to be strong enough? Is it going to be hard enough to push the dollar higher? The other story that's kind of happening is that even despite the fact that you have all this dollar bearishness at the beginning of the week, it wasn't enough to really kill the dollar against the euro, even against the yen, and certainly not against the pound, which was just hobbled all the way through. As far as the euro goes, the euro failed. Again, we're going to take a look at the charts. The euro failed miserably again at trying to break out above the 112s. The dollar yen actually held the 101s, which was a very big support level. And cable just continues to break. Cable broke this major support level that we talked about, the 130 level, this week, and cable still shows tremendous amount of relative weakness. Now, this whole week, we really have nothing of serious import, aside from the FOMC data, minutes data, which will be informative, but I don't think hardly market moving. We generally don't have anything. We have CPI data, we have a modicum of housing data. It's all doldrums of summer, which means that we could probably just simply be washing back and forth in range-based trading, and that's why ranges are still going to be probably the dominant trade and dominant play in the market. Having said this, though, it looks to me like the benefit of the doubt is to the positive side of the dollar, not to the negative side of the dollar. Let's just take a look at the ranges, and then we'll take a look at the charts and kind of see where everything stands up. The ranges in the euro, 1250 to 950. It's a relatively wide range, but honestly, those are the upper end of the ranges. We're sort of basically trading kind of 1150 to 1050. It's just a very, very tight range within the broader range. Dollar yen held the 101s. The really, really big point here is it needs to hold the 100. That's the key support number that it needs to hold. We don't have, as I said, we have what, Japanese GDP. We have nothing of any great import. Housing data out of the U.S. I'm just looking to see, CPI data, which is actually, frankly, been pushing up a little bit lately. CPI data is projected to actually, it's interesting. CPI data, ex-food and energies, is projected to be flat at 2 versus 2. It'll be interesting to see if it starts to percolate a little bit higher. Permits are coming up, and nothing else. I'm just trying to see if there's anything of real import, but there really isn't. It's kind of a very, very flat week. It's the doldrums of summer, and it's unlikely that anything is going to be really moving much, both in the yen and the euro, on a macro basis alone. Cable does have some news. We have retail sales. The cable story is going to be interesting because it's really going to be question of whether UK data gets worse. If UK data gets worse, it's really very, very probable that we're going to test the post-Brexit lows at a 27.50. Because remember, the whole idea here was we had a respite. We held above the 130 for a long time because basically everybody assumed that nobody's is going to trigger Brexit anytime soon. But what's happening now is the aftershocks of Brexit may be finally starting to kick into the UK economy. There was this sort of obviously immediate aftershock, contraction of business sentiment and a decline of business sentiment and all sorts of other things. But this week we get labor data and we get retail sales. And if there's a follow-through, a negative follow-through on both of those points, it's quite possible that cable could go to 27.50 because that would really assure the markets that the BOE is probably going to go to zero rates at the next meeting. Let's take a look at the charts here and see how everything shapes up for us into the week. It's not obviously a very crystal clear trade, but technically what's interesting about the euro is how ambiguous it is. If you're looking at it from the bearish side, if you're looking at it from the dollar bull side, it's very clear. You have a series of lower highs, big failures, blah blah blah. We failed even above the 112s here last week. We close very much near the lows. It's sort of a shooting star candle. All of these indicators showing us that the euro should fail down back to the 1050s. On the other hand, you look at it from the other end, and you have a series of higher lows, right? You basically have this very tight volatility squeeze. And generally, this is the interesting part. This is where technicals could really inform our direction more than the fundamentals can, because the fundamentals are sort of very muddy. Generally, when you have this kind of a volatility squeeze, so you come to a point of center here, whichever way we break, meaning that if we take out the 1250s to the upside or we take out the 1050s to the downside, that's going to be likely the extended direction of where the euro is going. It's going to be very hard to swallow the idea that the euro could rally, but if this week the euro goes to 1250 and holds it, it suggests that we could go to 1350, 1450 just on this sort of a dollar short squeeze. Nobody wants to own dollars type of a trade, and that could be very interesting. So in many ways, we're at a point of resolution, but we're also at a point of great uncertainty, and we need to watch for the price action. And that's why I wouldn't be making calls on a price action until and unless you broke the 1250 to the upside or you broke the 1050 to the downside. Then you would have a much cleaner idea of exactly the direction of where the euro is going to go. The story in the yen, not quite the same, but sort of similar too. You obviously have greater failures here. Yen is still very much in dollar yen is still very much in a huge downtrend. But we've been holding this 101s, quite well, and that's a big shelf. If we can continue to hold this, there's a potential here for us to re-rally towards the 102.50s, maybe even the 103s. A break below the 101s really does very quickly open up the possibility of the hundreds and then the post-Brexit lows of the 99s. Those lows could be tested just simply on risk aversion flows alone. And the thing about this that's kind of interesting but can also be very unsettling is, remember, the BOJ hates the idea of dollar yen coming to 100 because at that point it guarantees deflationary pressure within the Japanese economy. They simply cannot get themselves off the ground. So you're going to get, no doubt in my mind, a whole bunch of jawboning, a whole bunch of rhetoric the moment we slip to 100, warning the market about the fact that they don't like to see volatility in place. Whether they themselves are going to interfere or not, or intervene, hard to say. But I don't want to sell into the lows. I think what you could have that's a very dangerous trade here is a test of the lows and a squeeze back up, literally in 1 hour, where you go 100 points one way, 100 points the other way, and you could get very badly squeezed if you chase the lows. I'm very leery of selling the lows here. I think if we get a turn to the upside, it's a much safer trade to possibly 102s, maybe the 103s. And then last but not least, of course, we have cable, which is by far the weakest of all. We broke this very important 130 level. This 2750 is the post-Brexit lows. That's the level that we get tested. And that is actually going to be a much more fundamentally driven trade here, where you get a move possibly off the labor data and off the retail sales data that's coming up this week. And if the UK data begins to fail on both ends, actually, let me see what the market is projecting, just so that we can get an idea. So retail sales, the market is actually looking for a bounce back from the prior month, 0.1 against negative 0.9. And then on the claimant count, the market is looking for a worse number. They are looking for claims to rise to 5K from basically 0K. But, and this is really going to be the whole essence of where we stand. If you get negative numbers all across the board, bad average weekly earnings, bad increase on the employment rate, and a jump in claims to maybe even 10,000, all of that is going to hurt cable quite badly, take us certainly towards the 28 and possibly 27.50 bottom test. So cable to me is the cleanest short trade, assuming we get support, fundamental support on the triggers. And that's how the week shapes up. Going to watch all this very, very carefully. Obviously, the 100, 101s in dollar yen, the break one way or the other from 12.50 or the 10.50 in euro dollar, and the continuous drift lower towards the 27.50 lows in cable. Wish you guys the best of luck, the best of trading. Boris, over and out.